Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show today, jobs have rebounded in Canada, but it might surprise you to realize most of those jobs are government jobs. Not so healthy for the economy. And with rates shooting higher, what should you expect for housing? Plus, the crisis in healthcare hits a new level, with one hospital closing its emergency room on weekend nights for lack of staff. We've got the CEO of that hospital with us. That's all ahead. First, though, for the week that was in business, it's time for the briefs. The Bank of Canada took its fight against inflation up a level this week, raising rates a full percentage point, something Governor Tiff Macklem acknowledged is a sign of how serious it is.
An increase of this magnitude in one meeting is very unusual. It reflects very unusual economic circumstances. Inflation is nearly 8%, a level not seen in nearly 40 years.
Well, there is little doubt prices are still running hot. The question now is whether efforts to cool inflation cause a recession, and if so, how severe. Economists are certainly predicting a slowdown. The gamble by the central bank is the economy is strong enough that a drop will be modest. Meanwhile, a read on inflation in the U.S. laid to rest hope that it has peaked there at 9.1% in June. It is at a 40-year high. One place to watch for the effects of rate hikes is housing, and prices definitely cooled in recent weeks. Data from realtor Royal LePage shows that while overall home prices are still up from year-ago levels, prices are softening in the most recent 3 months compared to the start of the year. And very hot markets like Toronto and Vancouver have seen the worst of the declines, with drops of 8.1% and 4.1%, respectively. Rogers faces continued fallout from its second nationwide outage in just 18 months. It is upping the amount of compensation offered to customers, but will still likely face lawsuits to recoup damages. Rogers' CEO acknowledged that the company has to rebuild trust.
What we're really focused on is how do we gain and earn the trust back of our customers.
The federal government is asking all the major telecom players to craft a plan to cooperate in the event of outages so that customers and systems are not left in the dark. When premiers met this week for the Council of the Federation meeting, the headline was same as usual, getting more money from the feds, notably for health care, which provinces agree is in critical condition. The provinces would like the federal share of health care costs to rise from the current 20% to 35%.
If they're not acknowledging and recognizing the crisis in communities across the country, they're asleep at the switch, quite frankly, and we invite them to come and talk to us.
Other topics of conversation included affordability and inflation, plus supply chain bottlenecks. And while healthcare workers are still burnt out and overworked from the pandemic, we face the prospect of another serious wave of COVID. Health officials said Omicron BA.5 is the dominant variant in the current 7th wave, which they expect to peak in the next couple of weeks. Ontario expanded the availability of a second booster shot to all adults this week, aimed particularly at those who are immunocompromised. Twitter has taken the rather unusual step of suing Elon Musk to keep him from walking away from an offer to buy the company. Musk has said he won't buy Twitter because the social media platform won't release data on the number of users that are actually fake or generated by computers. Twitter says Musk has damaged its reputation, disrupted its business, and should pay the price of $54.20 per share he originally offered. Twitter's stock has fallen to the mid-30s since the deal by Musk was announced. And those are your business briefs. While rates in this country head higher in a bid to fight inflation, it's clear that our central bank is counting on the strength of the economy to hold up to higher borrowing costs. But what if the economy isn't as strong as the numbers suggest? Well, when it comes to job growth, that may be the case. Writing for The Hub, Sean Speer notes that the vast majority of jobs created in this country since the start of the pandemic have been government jobs. The private sector, meanwhile, isn't seeing much growth at all. Sean Speer joins us now. Sean, great to have you with us.
Thanks for having me, Amanda.
I think you've coined the term G-shaped recovery. We talked a lot about what the shape of the recovery would be. We never really pictured G. What's wrong with the vast majority being created by government and therefore tax-paid-for jobs?
Well, let's start by just contextualizing this conversation for viewers. At present, Amanda, 92% of all jobs created since February 2020 are in the public sector. The private sector accounts for roughly 7% of all jobs created. And as you say, that creates problems in two ways. First, there's a sustainability question here. as governments start to retrench from the highs of spending and deficits during the pandemic, and we expect governments to continue to carry the water when it comes to hiring in the job market. And then secondly, it speaks to the kind of underlying weakness in our private sector. And so that was really the intent behind releasing this essay, was to paint a clearer picture of what's really going on in our economy.
Yeah, and you do raise, and people should go read it. It's really interesting because there are a bunch of issues, threads you can pull on. Let's start with the economic one, which is just purely, is there a kind of a size of government that we would consider too big? And we'll include in that, not just government spending, but actual employees in the economy that are government, not private sector. And have we hit that number?
I think there's something to that at this point, the government is actually crowding out investment and hiring inside the private sector. We know, for instance, that we have labor scarcities to start with because of aging demographics and other factors. So when government is taking on such a major role in hiring, it's naturally going to have consequences for hiring elsewhere in the economy.
And then, of course, there's the social issue that you do allude to, which is government jobs tend to be higher paid, more secure, and with better benefits. Private sector jobs support those jobs, to put it baldly. Now, it's not a zero-sum game, right? When you have a government job, you also pay taxes. So I guess we could sort of try to figure out that math. But are we looking at some social unrest if you have a whole bunch of public sector workers supported by a smaller pool of private sector workers?
I think the short answer is yes, especially in a world in which private sector employment continues to change. Jobs are less reliable, there's fewer benefits, et cetera, et cetera, et cetera. And in that world, when we see more and more people working in the public sector, I think it risks creating resentment and some political tension in our country. So all this to say, I think governments need to create the conditions to try to boost investment and hiring in the private sector, as opposed to trying to solve these issues on their own by just hiring more and more people.
Only 30 seconds here, but we are staring down the barrel of some form of a slowdown, whether that's a recession, whether it's a deep one, we don't know. What does that imply when we've seen anemic private sector job growth? It's actually not that healthy in the private sector. What does that mean, do you think, if a recession does hit?
The people I'm most worried about are the self-employed. They still haven't recovered from losses in the pandemic. That'd be a group that I would watch in the event that we do tip into a recession in the coming weeks and months, Amanda.
Sean, so good to have you with us. Appreciate your time.
It's always a pleasure. Thank you.
Sean Speer is a Monk Senior Fellow for Fiscal Policy at the Macdonald-Laurier Institute. Coming up, rising rates are likely to hit housing first and hardest. So what are some of the scenarios that might play out? We'll explore next.